Hello everyone. The past few weeks have been tense for India. A terrorist attack in Pahalgam pushed the country to the brink of a full-scale conflict with Pakistan. But the tension still remains as Pakistan has violated the ceasefire. Just a day before the ceasefire, IMF lent $1 billion to Pakistan. This move has raised eyebrows. Today we are taking a closer look at the economics and politics of IMF lending, especially in the case of Pakistan, a country that has gone to IMF for over 20 times. Hi, my name is Swapnil Karkare, an economist and chartered accountant, and today in this episode, we are critically exposing IMF's lending program. We will break down how it takes decisions, which is often criticized. But before that, please hit the like button, subscribe to the channel and share this video. Before we dive into the politics, let us understand what a typical IMF program means. When a country faces a financial crisis, maybe they can't pay their debts, the currency is collapsing, or they are experiencing severe inflation. They often turn to IMF as a lender of last resort. But the money doesn't come free. In return, the country has to agree to a set of tough conditions known as structural adjustment program. These conditions typically follow a standard economic playbook, mostly neoliberal economic policies such as first, cutting government spending, which is called as fiscal austerity. This often means lowering subsidies, freezing or reducing public spending on public sector salaries, or even cutting budgets on health and education. Second is raising interest rates to bring down inflation if a country is experiencing more inflation. Third is privatizing public sector companies. This idea is basically that private firms are more efficient than government. Fourth is opening up the economy, usually by reducing tariffs and making it easier to trade across borders. This is called trade liberalization. And fifth is deregulation, which means removing rules that are usually hurdles for businesses and foreign investors. On paper, these should revive economies, but there is a short term pain to achieve this long term gain. And in reality, as we will explore in this episode, the story is far more complicated and a lot more political. Let us first understand how IMF takes decisions. At the top, there is a board of governors. It typically consists of finance ministers and central bank governors. Most of the day-to-day power has been delegated to executive board, which consists of 25 members or 25 executive directors. There is a clear division between these directors. Why? 7 countries, the US, Japan, China, Germany, France, UK, and Saudi Arabia. Only these 7 countries can appoint their own single exclusive executive directors. That means 7 directors, 7 countries. Out of 25, 7 are thus allotted. There are 191 member countries in IMF. So remaining countries together have to appoint remaining 18 executive directors. Each of those 18 directors represent 2 or more countries. And here are the groupings. Some groups are smartly designed. For example, Russia and Syria are in one group. So automatically Russia almost gets its own director. But India is clubbed with Bangladesh, Bhutan and Sri Lanka, a group of 4 countries. Pakistan is grouped with Algeria, Ghana, Iran, Libya, Morocco and Tunisia. This structure already hints at the power imbalance within the organization. The board normally makes decisions based on consensus, but sometimes it resorts to formal voting. The votes of each member country are determined by their quota, which is largely based on the size and openness of the economy. This means wealthier nations have significantly more voting power. US gets 16.49%, the highest of total votes. India gets 2.63%, China 6.08%, Pakistan 0.43%. If India wants to increase its vote, the formula tells us what to do. There is a big concern about this quota. The US, yes, obviously it has the largest quota, but it also has the veto power. That means it can change any decision. This is one of the most contentious thing about IMF. It is different than UN General Assembly. In UN General Assembly, the votes are simple and fair because one country gets one vote, right? But over here, this is tilted towards the size of the economy. This kind of thing makes it difficult to navigate the entire diplomacy inside the IMF. Now that we have understood how it works, let us dissect IMF's track record. Let's begin with the US factor itself. It is almost a no-brainer that US matters in IMF's decision making, given its vote and veto power. The research is quite clear in this case. Political friends of US are more likely to receive loans. During Cold War era, countries like South Africa, El Salvador and Haiti, which were US allies, received IMF funding, while the IMF rejected Vietnam's application. There is another interesting aspect. Not only did absolute friendship matter, even movement towards or away the US mattered. For instance, countries like Hungary, Yugoslavia, and Romania, which distanced itself from Soviet Union, ranked among top 15 IMF loan recipients from 1952 to 1984. On the other hand, Soviet allies like Czechoslovakia and Poland did not receive any IMF funding. They also observed that the managing director of IMF is usually European, but they rarely go against US decisions. Why? Because he or she came to power through the same process where the US has a veto power. A study by researchers from Korea and Harvard found that countries are more likely to get IMF loans if they have larger quota, which is obviously more number of citizens working in IMF, that's a different angle, closer political and economic ties with US and other major European countries. Apart from relations with US, politics also matters. Many countries do not follow IMF conditions after the loan is taken, and they keep getting new loans even after that. Reason? A former IMF official, Finch, said powerful countries started using IMF to give loans based on their political preferences and interests, and not just whether a country is capable to repay or not. Another fascinating study finds out that as the proportion of neoliberals in the government of the borrowing country increases, the chances of getting loan also increases. This suggests that ideological alignment plays an important role while getting these kinds of loans. Now let us talk about another side of IMF lending, who actually gets money. You would think that IMF is mostly run by democratic countries and it could be promoting democracy too. But that is not how it works. In fact, the research from Economic Research Forum, a think tank focused on Arab world, found that most countries in Middle East and North African areas that took loans between 1992 and 2020 were either autocracies or semi-authoritarian regions. Why? Because lending to autocratic government is far easier than lending to a democratic government. There are no opposition parties to slow things down, there are no labor unions protesting on the streets, and there is very little public debate also. The government can therefore push any reforms without worrying about political backlash. But here's one catch. Just because it is easier to lend money doesn't mean it always works better. The economic outcomes depend on multiple factors. So the takeaway from this section is that the IMF tends to lend more money if there's less political resistance, like the Pakistan's case. Whether that is good for people or not, that's an entirely different story, and we are going to talk about that in the next section. Now that we have looked why IMF keeps on giving loans to Pakistan, let us explore the economic impact of these loans. And the results are not that promising. Since the IMF tends to lend more to autocracies where accountability is low, there's little pressure to ensure that these loans will be used effectively. This lack of political opposition can make it easier for autocratic governments to secure loans, but it doesn't always mean good outcomes. In fact, studies show that democratic governments actually get better results from IMF loans. This may sound surprising because implementing IMF's tough conditions are usually harder in democracies. However, in democracies, there are negotiations, there are more stakeholders, which can probably delay the loan agreements and everything. But once they are put in action, it results in good outcomes. Take India's case. In 1991, we started implementing those stringent conditions. There was political instability at first when these reforms were initiated. But once they were implemented, they didn't just survive, they laid the foundation for India's economic progress. But now let us look at a broader picture. A study published in Journal of Development Economics concluded that overall programs tend to lower growth rates as long as country is in the program. Research from Harvard backs this up, and it suggests that a country would be actually better off if it can avoid IMF loans altogether. And hear me out. The negative effects aren't just restricted to growth alone. It reduces investments, it weakens the rule of law, and it even harms democracy. And when you take all these factors into account, Pakistan is one of the best examples of all this trend. The country's long history with IMF shows that how complicated things are, and you cannot rely on long-term stability and progress based on IMF loans. So now that we have established that everything is problematic with the IMF's granting procedure and the impact of the IMF loans, now let us understand the IMF experience of Pakistan. How Pakistan entered this crisis. I have written in depth about this in my latest article on Trendline. You can find out more information about it in the article. Pakistan's economic crisis is the result of years of weak governance, over reliance on imports, repeated borrowing without real reforms. So, what the Pakistan did was that instead of building exports or fixing structural issues in their country, like lower productivity and poor education, it kept on taking foreign loans. With rising inflation, foreign reserves depleted, it crashed the currency, and Pakistan was left with no choice but to get a bailout from IMF. This is Pakistan's 24th bailout. This happened after Russia-Ukraine war. For decades, Pakistan has delayed these reforms because they know that IMF will keep on rescuing it. This is what economists call moral hazard. But the blame isn't on one side. The IMF is also to be blamed. The IMF has been reluctant to take any action against Pakistan because it fears that okay, this might lead to bankruptcy, economic chaos, and regional instability, and so on and so forth. But former IMF advisors themselves, for example, Etisham Ahmed and Aziz Ali Mohammed, wrote that governments have tried to game the IMF and they have succeeded. Surprisingly, the last year was pretty good for Pakistan's economy. Fiscal deficit was slowly coming down, rupee was a bit stable, interest rates were a bit normal, stock market rose 84% higher than probably India's. And that had attracted a lot of investor attention too. So it was shocking that Pakistan would, escalate this particular situation amidst like reviving economy. And amidst all these things, IMF has given them another tranche of loan. So I feel that okay, probably you are not in a position to not lend this money. What they could have done is that they could have given strong warning regarding the usage of these funds. That could have sent a proper signal to the investors signal to other developing countries, developed countries, and to the entire world, where IMF stands strong against terrorism. Now that didn't happen, and it is not surprising considering whatever we have discussed for now. But it is shocking that even today the IMF is not taking a proper stand against Pakistan. Now, there is another thing that has sort of lately becoming more problematic for the IMF, and that is influence of China. Not that China is influencing IMF's decisions, but China has become a growing competitor to IMF and World Bank because China has emerged as a major alternative to IMF. It has lent billions of dollars to financially distressed countries like Pakistan, Sri Lanka, Argentina. And unlike the IMF, China does not want structural reforms. They don't want some big conditions. They are happy giving this kind of loan because they have a strategic intent. They value resources, ports, ownership of critical infrastructure, political leverage, diplomatic leverage, political loyalty. All these things are important for China for its growth. Research shows that once a country gets a loan from China, there are less chances that it approaches IMF again. So, this adds another layer of complexity in the IMF world because now IMF might have felt pressure that, okay, if I am not lending to Pakistan, China will. And we all know China has already supported Pakistan in terms of defense equipments and everything. So why not in lending also? They would have happily done that. So I don't think this is like not far-fetched idea because China will be happy to lend to Pakistan and in return they will expect more political loyalty, which they have and they can. This creates a tricky situation because on one hand we have IMF, which is dominated by US and European countries who have historically supported Pakistan. These nations have today acknowledged that okay, India's position is probably right and they have a right to defend itself. But on the other hand, we have China, which openly supports Pakistan, both militarily and financially, even within the IMF. And then there's an unknown world where we are not giving aid to Pakistan at all. What will happen in that scenario? If no one decides to intervene, the consequences could be anything. They can range from like increased civil unrest to heightened border tensions. And that's a risk for India too. So we are sandwiched between every kind of big institution. So ideally speaking, a healthy Pakistani economy is good for India because more jobs, more income, fewer younger people turning to terrorism. And this has been India's strategy for a very long time. Now things have changed, but we don't want to digress there. Now, IMF's decisions, we have all understood that there is more politics and probably political leanings than economics in play. The institution claims that it is neutral and technical, but the evidence kind of tells us a different story altogether. So here are some takeaways. Quotas are biased. What can India do? Increase the votes by improving its economy. Countries closer to powerful seven countries will always get preferential treatment. This kind of favoritism will worsen if there is a growing competition with China. Meanwhile, actual results of IMF programs are disappointing, are very disappointing. They hurt economic growth, they reduce investments, and they also weaken democracies. This forces us to rethink the entire global financial system, its structure, its decision making, its processes, the real impact on the different countries. It is not just about economics anymore, it is more about power, diplomacy, and ideological leanings. To navigate this complex system, India needs to create stronger allies who can support us strongly and openly. The West needs to stop playing on both sides with regard to India and Pakistan. They should clearly stand with India against terrorism. After all, Osama bin Laden was found in Pakistan, so Trump shouldn't forget that. And many other UN designated terrorists have found shelter in Pakistan. So it is hypocritical when leaders like Trump call both India and Pakistan great nations. Pakistan a great nation on which angle? The reality is that supporting Pakistan indirectly supports terrorism. The West needs to drop its fake balancing act. They know that they need India for business and still they want to keep Pakistan as an ally. This needs to end. And then there's also China, so that's like a topic for another day. But overall, I would say global business of lender of last resort or lender of first resort, whatever it is weaponized against poorer countries. So making economies stronger is the only thing that countries can do, that India can do amidst all these things. So one message to other troubled countries: if you can manage your domestic politics and can come together to revive economy, I believe IMF programs will help you. Just look at India. We came out of crisis in 1991, implemented strict reforms for a decade, and we even repaid the IMF loan in full by the turn of century. That's some inspiration from a global south country. I hope you found this episode interesting and eye-opening. If you liked it, hit the like button, support the channel by subscribing it, and share this video across your colleagues, family and friends. Thank you.
That's all folks. Do support this channel. If you have learned something new today, then like it. If you think that this information will be useful for someone else, then do share this video with others. And yes, don't forget to subscribe to the channel. Thank you. Goodbye.